Hi folks, this is Sean Hyman, and I just want to talk to you about our chart of the day. I want to look at Eurodollar. I want to look at a couple of things about Eurodollar. One, everybody's seems like been trying to call the top around 150 or so, and I just want to point out that the last time we made it to above 160, and so previous to that, the high had been in the 130s, and it didn't even make it to 140. And so we were at 130s, and this did this one big pullback down to, I think it was like 118. I don't think anybody could have ever imagined the pair going from 118 to over 160. And I'm sure people would have thought that's way out of hand, that's way overdone. And so keep in mind, when it looks like when you have a rally up and you have a consolidation that looks like a top or lack of momentum, and even a pullback from that, it does not mean that it's going to end that trend and it will pop forward. You'll see that happen a bunch of times on the way up, and then finally you'll get to one that really is the top. But you got to keep in mind, especially towards the latter end of a bull market, man, I mean, things can really rip and roar pretty darn fast, because this didn't take, I mean, it went from 149 to over 160 really quick. I mean, it was just a big parabolic move here. So I would definitely not call a top here in the euro dollar, being that we've definitely been a lot higher, and I don't think anybody would have thought that we'd have gone from 118 to over 160. And we've started higher this time at 125, and we're at 150 now. Could we go to 155, 160? Sure. Could we go higher than that? Sure. Will we? Who knows? But what you do is you trade with the trend until it ends. And so if we go back to this daily view, daily 1-year chart, which way is the trend? I mean, it's one of the prettiest trends you'll see from the lower left to the upper right. Higher lows, higher highs. Many different ways that you could define it. You could put moving averages on here, a 50 SMA, a 200 SMA. Guess what? They'd be pointed up as well. So the river is flowing this way, yet people are trying to swim back this way. In other words, they want it to go down. They're trying to call a top on it. It's really futile. So keep your focus on that. And I also want to show you one pattern that I recently looked at on a shorter time frame, and it's unfolding right now. Let me draw this out real quick. Won't take but just a second. And this way it'll emphasize this right here. Okay, this is called a flag pattern, technically a bull flag pattern, meaning for the pattern to complete, what you would need to see is a break to the upside. There are times when it can go up and look like this and then head on down. So what makes a flag pattern and what makes it complete is when you see a break to the upside after this consolidation. So here's your flag part waving in the air. Here's your flag pole. Now the amazing thing is, this flag pole is about 250 pips from bottom to top. This bull flag pattern has a measurable target from the point of breakout, so from the distance of the flagpole. So in other words, your flagpole is your measuring stick. This particular flagpole happens to be at about 250 pips. So what you would do is you would start counting from where this breaks out 250 pips up. And that is a minimum price target. It doesn't mean that that's the maximum price target, but it does mean it's a minimum price target. Also, keep in mind, these things will not go straight there. They will do just like we've seen here. Nice pop up, consolidation back, nice pop up, consolidation back, etc. So it will wave its way, up and down all the way to that. But if you consider that the breakout's around 150.25, but just for simplicity, if you said 150 even, then you're at 152.50. So 152.50 to 152.75, anywhere around there is the next target for this pattern. And so we're seeing a lot of that play out right now. And so is the top in place? Probably not for euro dollar, because if this pattern holds true upon this breakout and it reaches its target, I mean, that'll put you a new high higher than what we have right here as well, back just shy of 150, 150. So don't be quick to try to call the top on euro dollar. I know it seems like it's extreme. I know it seems like it feels like it's gone too far. I know it feels like the dollar has fallen too far. But I'm going to tell you, there is not a such thing as too far in currencies. There's not. I've seen 6,000 pip drops within weeks or months. I mean, seeing things like that will really frame up in your mind what is too far, and you will really realize that there's not a too far out there. So things can get extreme, and you should still stay with the trend, even if that trend seems extreme. So, when we're going back to our daily chart here, let me take this off of here. Go with this trend. Don't fight it. And now it doesn't mean that because the trend is up, that if you buy at any point in time that your trade will do nothing but go up. Because do keep in mind, there are pullbacks within uptrends. For instance, this pullback here, went from 150.65 down to 146.25. Well, that's a pretty good little, little pop there, almost a 400 pip drawback. But then, it advances forward and takes out a new high again, pulls back again to this wick right here, and then heads out again. So your next initial resistance is going to be at 151.36, around there. But remember, that target takes you well above 152, and so that would be, if it fulfills that target, you'll go for sure into recent high territories again, and we won't even hit all-time high territory until we clear 160 and almost hit 161. So keep these things in mind when you're trading the most common currency pair out there in the world, euro dollar. Also, this euro dollar strength will tend to support things like euro yen and some of these crosses as well. So euro buying across the board is what you'll typically see, and a lot of that will be affected by the buying that we see in euro dollar. So that is our chart of the day. Thanks so much for watching.